Welcome to StockOdds, Odds and End podcast. Welcome to StockOdds. This is Dave Singh here with Rob Friesen, getting ready for the week ahead. Good evening, Rob. How's everything?
Oh, yeah, busy weekend, but it's our Canadian Thanksgiving weekend as well. So Monday's a holiday up here for Canadians. So expect lighter volume on the market with some of our institutions offline, personal investing, some of them offline, taking a long weekend out of it. A big travel day, a big, lots of busy activities, lots of family stuff. So it's busy, but just keep that in mind for Monday that the volume on the New York will be a little bit less than normal.
I think the bond market's closed too, correct?
I haven't even looked at that. Sorry. Is it what day is it? What day is it?
Columbus Day.
Columbus. I remember Mr. Columbus. Yes, good for him. Definitely. Then the bonds are closed. So that means that the S&P is trading without the supervision of Big Brother, right?
Yep. So we could get swings either way sometimes.
Well, it can. You could have a bigger rally day if the bonds aren't around. It's possible. I mean, looking at some of the stuff that we're screening for StockOdds, some amazingly bullish skew overall from what happened on Friday's move down. So, like if you look at the average performance of the entire S&P 500, what's projected under some of the signals like momentum or RSI, and you go click on in your web screener, you click on average, you'll see that the skew is to the bullish side because we had such a deep discount on Friday, right? So that may not be the case. We may have an interference, which is why we like to trade hedged. So
we could be coming into the week with a big discount because mid-month seasonality is quite bullish as well. So the fact we had such a big day down, that could be an advantage to a lot of the things we're trying here.
Yeah, but we don't start that till the 9th business day, right? So if we're looking at that would be starting on Thursday, right?
Correct.
So we got a few days here to get through before then. So we're really in a lull here as far as we had the first Friday seasonality, and now we have the mid-month starting on the 13th. But we're coming off the back of China's national holiday week. It's called the Golden Week. That's a time where trips, tourism, family all sort of happen. It's one of the bigger holiday weeks of the year for them, and they're coming back, and we're starting to see Asian equities sell off, and probably the reason is, whenever you've had these events where many people get together, you've had an increase in COVID, right? And they have don't forget they have a zero COVID policy. So the lockdowns are probably imminent, which can affect oil. Oil had a pretty good week, and we may see it have an opportunity to pull back, perhaps. I don't know. I mean, I'm still, I mentioned last week I was favorable on oil, and it did have a pretty big week. So if it pulls back, this would be the time if people are concerned about these lockdowns. It is off a little bit tonight already. Crude oil is down minus 0.71, or it's minus 0.77%. It's pulled back. So that's a potential sign that maybe it'll have a little bit of a stall just because of the Chinese effect here, perhaps. Now let's look at our other futures. The Dow Jones is currently down minus 0.41%, or 121 points. S&P is down 17.5 points, or 0.48%. NASDAQ is down 57 points, or 0.52%. Russell is down 8.7 points, or minus 0.51%. And the VIX is up 2.57%, back up kind of, we got a bit of resistance around the 32 on the VIX. So it's hanging in right around there at the moment. It did have a spike, up last week a little bit, but not like super sharp move up, but just kind of a little bit elevated. And it's right back up there at the moment. So looks like the market's factoring in a little bit of concern going forward, still on this theme of inflation and interest rates. But, we kind of had that tackled a little bit last week. So there is a potential for a bounce. And we're not, we're kind of in limbo here a little bit because they're sitting at about a half back to 2/3 back of the move that we had up is how far we pulled back, but we're not yet on the beginning of October low, right?
Sure.
That's a point to test for sure. So that was October the 4th and the 3rd, somewhere in there. Third for the S&P 500 was October 3rd. So then we went up, and then we pulled back half to 2/3 of that move. So maybe we'll still go down and test the low again before we're satisfied, or maybe it puts in a bit of a higher low and starts to draw in buyers that way. That is definitely a possibility. Okay, looking at metals, rolling back over from the recent spike up, and looking at currencies, the US dollar retraced half of the pullback. So it pulled back to what was formerly resistance and became support. And off that support, it bounced about halfway back. So the US dollar is still holding up. It's up slightly tonight. And there you have it. Bonds, what's happening in the bond world. And we're kind of sitting just off of the lows on the 30-year bond. Same thing with the 10-year. There you go. Over to you, Dave. What do you got?
No, I was preparing for the mid-month seasonality, which is later in the week. We do also have some earnings coming up this week. So we'll start with the earnings. On Monday, nothing too eventful. On Tuesday, we have Delta Airlines, BlackRock. Wednesday, we have Pepsi. Then at the end of the week, we have quite a few earnings that might be significant. Thursday, we have Fastenal, Charles Schwab, Dr. Pepper, Goldman Sachs. And then Friday is the big day. All the bank earnings. We got USB, US Bank Corp, Wells Fargo, JP Morgan, Citi, PNC, Morgan Stanley, and then also United Health. So end of the week could be a lot of interest in financials, and some of the earnings reports there could be a driver as well. And then the 10-year Treasury continues to almost get to 4%. We're at 3.88% now, but if that keeps going higher, that's also supportive for financials to some degree. But I think end of the week, expect financial earnings to be a driver. And then that mid-month seasonality does start on Thursday. And it is quite bullish. The entire month, most of the gain can be attributed to that mid-month seasonality. So the S&P is expected to do 0.81 during that period. And for the entire month, it's expected to do 0.79. So mid-month seasonality is expected to be strong. And then within that, the Qs are expected to do better than the Spider, slightly. And the Dow weaker. So Qs, Russell 2000, and Spider about the same, close to 0.8% expected return. And then some of the ETFs within that are expected to be longer or shorter. We'll start with shorter. Energy, XLC, XLK, XLP, and XLY. So discretionary, staples, technology, communication, the oil could be weaker, as well as the ARC stocks. And the stronger things, The solar stocks, the TAN expected to be up 3.3%. So solar stocks strong. The SOX, which is chips, biotech, XBI, gold, SMH, GDXJ, basic materials, and some financials, XLF and KRE. So the seasonality in financials is expected to be strong. If the earnings reports are strong as well, that might be some really good place to be long later in the week. Financials and some basic materials. But that's that.
Well, we do have, like you mentioned, the SOX. I think with the policies that have been put in place for kind of curtailing China's technology development in the chip area, this favors U.S. chip makers. So kind of looking at, even starting tomorrow, if the day can turn out to be a little bit more favorable, maybe pre-market we get a good indication. Some of these chip makers that got really hammered on Friday might bounce back. So keep that in mind. And also this is an interesting area with utilities, because they had some really significant sell-off day after day after day. They're quite dramatic. And so the tension is, with utilities, is they have to sort of please the stakeholders as well as the consumers. And, any type of price controls or caps or whatever can really hurt their ability to increase prices, because at the end of the day, they kind of need to pass it on to the consumer. But that might be a tricky road. So that's kind of why these utilities, which are normally defensive, have been so impacted. One, they were elevated during the initial sell-off that we had this year. Utilities did quite well because they were defensive, and recently they just started to really give it back, and it's more related to these price concerns. Are they going to be able to raise prices to the consumer so they can keep their margins and etc. And also, if the debt, they're highly indebted, right? Because there's a bond component with utilities. Is if interest rates keep rising, it can affect utilities. Correct. So just keep that in mind. Now we do have some economic reports this week. So Wednesday we have PPI, and that will be interesting because that's kind of steps into our inflation discussions, right? And then we have FOMC meetings, meeting minutes, the minutes on Wednesday as well. And then we have Thursday, just when seasonality kicks in, we have CPI, right? So again, and then Friday we have retail sales and
consumer sentiment.
There's initial jobless claims as well. Yeah, get a bit of consumer sentiment and stuff too, right? So it's, earnings start off a little bit slower, but like the banks really kick it off as Dave mentioned right on Friday. And you don't have to have exposure to things that obviously have earnings if you don't want. Like stay in groups that you don't have those issues, and especially if you want to tackle consumer discretionary or oil, energy, or whatever, like you can be long and short within the same group. There's some remarkable opportunities just going to the StockOdds web screener and picking up a group, for example, like XLE components, and then taking and looking at the odds of how are some of the symbols supposed to do relative to XLE on the bullish side and on the bearish side. Take your 5 top bullish ones, 5 bottom bearish ones, and put them together. And you don't even have to use the ETF. You just balance the capital on the longs versus the shorts. So there's lots of ways to sort of stay out of directional exposure, out of trouble, as it were, which can work for you, but it can also work against you, right?
And we still have our geopolitical risks. Nothing's changed there. Got Russia, Ukraine, that tension is still there, no sight of resolution.
Well, I would say it's actually increased the risk of it because, the more retaliatory Ukraine is, even if they're winning, just puts more pressure on potential move to unconventional weapons, right?
Yep.
So this is getting, just because ground has been gained, and maybe they took out the Crimea bridge, however that happened, whether it was a false flag, a mistake. I think the latest was some kind of logistics mistake or something, or whatever, whoever took it out.
Mm-hmm.
The problem is that it just gets used as another excuse to bomb the crap out of something else, right? So, like, this thing isn't getting better. It's not getting better. It's possibly getting worse, and we have to take that into account.
And there's no visible off ramps for Putin.
No, not really. No. You wonder, like, if he gets to the situation, he's got nothing to lose. I mean, there is the risk that somebody takes him out. That might mean it falls into better hands or it falls into worse hands. It's still, even that you don't know, right? Yeah. So there's no easy way out on this. It's war. War is messy, and we shouldn't even be in this situation, right?
Correct. Yeah.
So, well, anything else on your? Did we miss anything on your list here?
Not on my stuff here, but
okay. Yeah, so I'm kind of allowing for a rally in these first few days before we get to the FOMC minutes, which would be at 2 p.m. Eastern time on Wednesday. Mm-hmm. So I'd be kind of allowing for a rally in these 3 days, even though we haven't tested the beginning of October low, and we still might do that, and so I have to allow for that as well. So, to hold your ideas loosely, don't be overly committed, don't be stubborn. And again, we get to trade hedged, which is remarkable. We have ideas for the long side. We have ideas for the short side. We have a lot of ways to look at things. We also have the seasonality. Friday's seasonality, just the stocks itself, were 0.33% return on capital. You can go look at it yourself. The symbols for Friday that said, hey, these are the good long symbols and these are the short symbols. Anything with odds over 50, produced 0.33% return on capital from open to close. So, in spite of all of the stuff going on in the world, in spite of all the bad news and the fear of inflation and rising interest rates, and Fed's going to be more aggressive and for longer than we thought, still one basic statistical piece of information, which is how things have performed in the past, came through and produced as, kind of as expected. So leave you with that, and let's have a good trading week. Good luck on your list there. Yeah.
Good luck. Thanks.